Hey, this is Chico. Let's talk about Carvana and a few other stocks. Yeah, Carvana got hit with a research report from Gotham City Research. Here it is, Gotham City Research, claiming that their earnings are overstated because, in short, one of the Garcias, uh, in the Garcia ecosystem. So Carvana is founded by Garcia the second, dad, and Garcia the third, Ernie Garcia the third, and so they're claiming one of their entities called Drive Time is inflating the earnings by taking on more debt and sending credits to Carvana and propping up the earnings. And so that sent the stock crashing yesterday. You can see here from 480 all the way down to hit a low of about 375, and then it came back up to 410, and today it's a little bit up, close to 427, around 427 here. And the reason it bounced back was J.P. Morgan and BTIG. Take a look at it here. BTI. Oh, sorry. BTIG. Yeah, BTIG came to make a comment about the report, and basically they saying the report doesn't really address the issues that they claim. Here it is. Marvin Fong from BTIG. He says the most serious ones are not well founded, adding that these core allegations underpin many other assertions being made. The firm disagrees with Drive Time's leverage calculation in the Gotham City's report, noting that also the 20 to 40 times leverage is misinterpreted on how it scrutinizes the assets that appear on Drive Time's balance sheet. And so, yeah, if you go to Gotham, they also have they acquired Drive Time's annual report through the Freedom of Information Act, and so yeah, so BTIG is basically saying that the claims don't stand on solid footing. And Raja Gupta, covering Carvana for J.P. Morgan, is saying, in short, he says over here, he said, report wrongly describes how the service income from Drive Time flows through Carvana's related business. So that's his take. Well, go into more details. I'll link all these articles in the description. You can find it there. If not, just find it on a web search. And then also here in this article from TipRank, it did say that Carvana did come out and made with a company spokesman saying that Gotham report was inaccurate and intentionally misleading. So yeah, I mean, like when they come out with the report and the stock sinks, I'm sure Gotham City was, and all the buddy short sellers out there probably have like pretty serious positions betting against Carvana. And anyways, yeah, that's kind of where it is. I thought that was kind of interesting. In other news, yeah, this is kind of cool. Robinhood, U.S. mulls tapping Robinhood for Trump accounts for kids, as Bloomberg News reports. I don't know how true this is, but this is what the article is saying. And then today, I wanted to buy CRWV for our portfolio back when it was in the 80 range, and I said if it dips down to 70, I mean we'll pull the trigger. But after that, it just shot up all the way. It went over to, I think, 110 or something like that. Yeah, 113 up there. And when Nvidia announced that it was buying another $2 billion worth of the shares to take a bigger stake in CoreWeave. Yeah, Nvidia wants to support CoreWeave and help the AI data center build out, and so prop up the stock, give them more financial flexibility and potential profitability. So yeah, now today it's come all the way back down to 100. I'm wondering if should pull the trigger if it hits maybe around 90 or not. Let's take a look at our portfolio. So here's our portfolio. We have Carvana, Hood, Robinhood, Broadcom, Meta. Meta had a great quarter release yesterday. Tesla, not so much. So sitting steady up there in the mid 400s, 435 in this case. Meta shot up to 732. So that's doing well for us. Carvana was at 480 when in my last video, I said I'm going to load some on Carvana, and loaded 40 shares out of 50. And so we got 10 remaining. So it kind of got out there. That was nice and gave us a extra 23K's worth of funds. And then Robinhood has been trending down lately, so it's been dragging down the portfolio. And same, Broadcom's earnings in the last release also plunged, and so just waiting for that to turn around. I want to hold on to Broadcom for more upside. So yeah, here our demo portfolio for those that are tuning in. We had 100K in 2025 March 12th, so it's less than a year, and we are at about 147, 148 right now, and we didn't use any margin to get to this point. We were much higher at one point, but then at the end of last year, we hit a few landmines, let's just say, with Oracle, Broadcom, and now Robinhood to pull us down. So you can see, yeah, Robinhood, I sold it 40 shares, 482. And yeah, the game plan is, do I want to buy back into Carvana? And given all the news out there, I mean, it's kind of risky, but I guess we'll be playing with a little bit of a house money, you could say, here. Of course, I don't want to take too big of a chance, but yeah, maybe it's worth it, because if these research analysts have come out to help defend them, and if we wait a little bit, and the stock sustains, I mean, nothing happens, then maybe there could be much more upside. I don't know if there's short squeeze, but maybe. Carvana does release earnings on February 18th, so that's kind of like in 3 weeks or so, right? Maybe a little bit less. Yeah, interesting time. So it would be taking a chance, and these things, you just, when it comes to a short battle, you just don't know what happens. One side could tell you a very compelling story with a lot of information, a lot of points, and it's very convincing, but from what I've seen, it's never. There's so much more information to it, and understanding like what will happen if it's actually truly, like, how big of an issue it is very challenging. Okay, so I'm gonna leave it at this point. I'm not gonna do anything at this point, but yeah, food for thought. Okay, don't forget to leave a like if you like this video, and stay tuned for the next one.